Although the U.S. is expected to capture a lot of the attention from traders, it's also looking to be a big week for trading in Canada as well. There's a number of big developments north of the border that could have a significant trading across markets. We're going to start off with corporate news. We'll look at Canadian bank earnings. On last week, we had two reports. They were both very strong. CIBC and Royal Bank both beat the street by a wide margin. Both raised dividends. Interestingly enough, though, following the initial spike on the CIBC news, we actually saw the Canadian market starting to slide back off, where the banks had a big rally between November and early November, their last round of earnings reports, and this one. So we're actually seeing quite a bit of profit taking against the news, even though the news has been positive so far. It also suggests that if we do see disappointing news, we could see some declines in the Canadian banks accelerate as well. And I'll show some examples. On Tuesday, we have Bank of Montreal and Bank of Nova Scotia. Both of them have actually been starting to roll over. And if we look at BMO, we've been getting higher highs in the stock price, lower highs in the RSI. That's telling you upward momentum is slowing. Traders may be looking for an excuse to take profits against some more of the bank earnings. So that's BMO. Also, Bank of Nova Scotia had become quite overbought. It's also been rolling over as well, although it's still getting support well above its 50-day average. On Thursday, we get Toronto Dominion Bank. We're seeing the same kind of thing. It accelerated through most of February. Since bank earnings season has started, though, it's been coming back off as well. So we'll see what happens with results from these three banks. We also have a number of economic reports due out for Canada during the week. Tuesday the 28th, we get producer prices, which are expected to see some month over month, some slowing, still some growth, but not the huge run up we had in last month. Last month, to give you an idea, we had a 6.5% increase in raw materials. This month, they're looking more at 1.2%. On first thing in the morning on March the 1st, we get the Canadian Manufacturing PMI report. The last month was about 53.5, so still running nicely above, a number nicely above 50 would confirm a continued growth in the Canadian economy. I'll talk to Thursday first. We get GDP. We get for December, Street is looking for a 1.7% increase over year, up slightly from a 1.6% increase over year for November. We also get quarterly GDP. Q4 GDP is supposed to come in at 2.0%, down from 3.5% growth in Q3. Let's see what happens there. The good news for the Canadian economy is that the U.S. has been strong, and on top of that, the oil prices come back, and we're into a stronger season for energy exploration. So we could see a continued pickup in the Canadian economy. Canadian job numbers have also suggested a robust economy. The other big event to be watching for this week is Wednesday. Wednesday, the first 10 a.m., we get the Bank of Canada interest rate decision. As I've noted, the Canadian economy has been doing fairly well, so you would expect the bank to take a neutral stance. However, last time around, Governor Pallaz kind of surprised everybody a little bit by saying, yes, the Canadian economy is good, but if the U.S. starts to take actions on trade and Canada's economy gets sideswiped, then we could, the Bank of Canada stands ready to cut rates if needed but that's more based on external developments. Now, since then, there's been a number of meetings between the Canadian officials and the new U.S. administration. So Prime Minister Trudeau's been down there. The Foreign Minister Freeland has been down there. Finance Minister Morneau has also been down to Washington as well. So there's been a lot more. So we'll see if that's just now trickling back, and we'll see what happens in terms of tone from Bank of Canada Governor Pallaz, as he's still as worried about trade issues as he was 6 weeks ago. That we'll see. The last meeting was before the inauguration, so things could be a little different. It's hard to say how that's going to shake out. But the last meeting, we did see, and we can see it here on the dollar CAD chart and the CAD US chart, that we actually did see around the time of the previous meeting was mid-January, and at the time the loonie did tumble a little bit. It's since recovered, but it did tumble a bit following the previous Bank of Canada meeting when he went more dovish. So we'll keep an eye on that. More recently, dollar CAD has been trading between 130 and 132. We're kind of sitting in the middle. CAD US dollar is kind of bouncing around between about 75.80 and about 76.80, maybe 75.50 to 77 and a quarter, give or take. We've been trending sideways lately. lately. So, but all this amount of news that we do have coming out could spark more trading action in the loonie once again. Also, just looking here at the Canadian stock market, a few things. The Canada 60 has been generally in an uptrend for about 9 months now. We did see a recent new high and we've seen it tumble back. I think this is getting dragged back by this correction we're getting in bank stocks, because banks is one of the big factors driving the Canadian market. Also, of course, keep an eye on commodity prices, how that impacts trading in energy stocks, as well as miners throughout the week, both precious metal miners and base metal miners.